Ladies and gentlemen, good afternoon. Thank you for joining us for today's live webinar on sustainable banking, now and the way forward. My name is Serena. I'm part of the Social Innovation Research Team at the Public Policy Institute of our Hong Kong Foundation, and your MC for this event. First of all, on behalf of our Hong Kong Foundation, I'd like to extend a very warm welcome to all guests, members of our Hong Kong Foundation, friends from the media, and members of the public joining us virtually. We're all in for a treat, as today, we're honored to have with us in our midst some of the very top thought leaders from the field who will be speaking about the latest developments and trends in sustainable banking. Also, I'd like to thank three guests joining us virtually today: Professor Christine Low, Dr. Ma Jun, and Professor Colin Mayer. To kickstart today's program, I have the honor to invite up onto the stage our guest of honor, Mr. Joseph H.L. Chan, the Undersecretary for Financial Services and the Treasury of the Government of Hong Kong SAR, to deliver the opening address. Mr. Chan, please.
Stephen, distinguished speakers, ladies and gentlemen, good afternoon. It is my great pleasure joining you at today's forum, Sustainable Banking, Now and the Way Forward. First of all, I would like to thank the organizer, our Hong Kong Foundation, and the co-organizer, Hong Kong Green Finance Association, for your continuous contribution to the development of green finance in Hong Kong. In light of the accelerating global demand for green finance, Hong Kong, as an international financial center and a global renminbi business hub, is well equipped to develop into a leading regional hub for green finance. We serve as a premier financing platform for international and mainland green enterprises and projects in raising funds through issuing bonds, initial public offerings, and other channels such as fund distribution. The outline development plan for the Guangdong, Hong Kong, Macau Greater Bay Area, as promulgated last year, and also the opinion on providing financial support for the development of the Guangdong, Hong Kong, Macau Greater Bay Area, as promulgated just last month, further support Hong Kong's development into a green finance hub in the region. We will continue to seek to capitalize on the green finance opportunities in the Greater Bay Area and the Belt and Road Initiative. Our core competitiveness, including free flow of capital, free flow of information, our common law legal system, transparent and low tax system, and our deep and liquid capital markets help maximize Hong Kong potential in developing into a regional green finance hub. And we are well demonstrated by the success of our inaugural government green bond issuance under the government green bond program in May 2019, which was well received by investors worldwide and set an important new benchmark for potential issuers in Hong Kong in the region. Building on this momentum, as announced in the 2020 and 21 budget, we plan to issue green bonds totaling 66 billion Hong Kong dollars in the 5 years from 2020 to 2021, having regard to the market situation. This will further consolidate and develop Hong Kong's position as a premier green finance hub in the region. Sustainable banking is one of the key pillars of our green finance development. HKMA, the Hong Kong Monetary Authority, as our bank regulator, is working to embed the consideration of climate-related risks in its supervision of banks. In May last year, it announced a three-phased approach to promote green and sustainable banking. The focus of the approach is on banks' management of climate-related risks and, to a lesser extent, the management of the broader environmental risk, incorporation of climate change issues into the corporate social responsibility initiatives, and development of sustainable related businesses. These three phases, number one, is to develop a common framework to assess the greenest baseline of individual banks. HKMA has also collaborated with international bodies such as the International Finance Corporation to provide capability building to banks. Phase 2 is about engaging the industry and other relevant stakeholders in a consultation on the supervisory expectation. And Phase 3 is about, after setting the targets, to implement, monitor, and evaluate banks' progress on this regard. On Phase 1, last year, HKMA set up a working group consisting of bank representatives and developed a common framework to assess the greenness baseline of individual banks. The first assessment has commenced this May, and banks are expected to return their self-assessment results to HKMA in August. The assessment will facilitate banks to understand their readiness and preparedness in respect of climate-related risk management, as well as informing HKMA's policy work to see how the development will best fit the industry. Moving forward to Phase 2, HKMA will soon issue a white paper to set out its initial thoughts on supervisory approach to green and sustainable banking, covering key areas such as governance, strategy, risk management, and disclosure. Taking into account the self-assessment results and industry feedback, it targets to consult the industry on the supervisory expectation and requirements in the first half of 2021. It is also exploring ways to facilitate banks' development in the management of climate-related risks and businesses, and will conduct studies on the potential obstacles to the development of green and sustainable banking. Ladies and gentlemen, climate change is one of the major risks threatening the well-being of mankind. It must be tackled on the global basis and across different sectors of the economy. In fact, the Hong Kong SAR government signed the Green Bond Pledge last year, which is the first Asian signatory to the Green Bond Pledge. It demonstrates our commitment to incorporating low-carbon, resilient, and sustainable solutions into the planning and deployment of infrastructure projects, with the aim to reinforce the goals of the Paris Agreement. We will continue to work closely with you, industry practitioners, and stakeholders in developing and promoting banking and financial activities for a sustainable cause. I wish today's forum a very big success, and thank you very much.
Thank you, Mr. Chan, for your remarks. In the next 10 minutes, our social innovation policy researcher, Johnson Kong, will give us an overview of recent trends and developments in sustainable banking, as well as sustainability opportunities in the banking sector. Johnson, please.
Thank you, everyone, for joining this Sustainable Banking webinar today. Here we go. So we are almost halfway through this year, which has been surreal for many. COVID-19, Australian wildfire, and the ongoing flooding in China. Many people just can't wait to return to normal. But perhaps it's exactly the time we need to think about how to move forward instead into a sustainable future. And I believe sustainable banking has a role to play in this transition. In fact, banking may even have a special role in Hong Kong to play, given our company's favorite bank loans as a source of financing. As you can see in this chart, we have an extraordinarily high bank credit to GDP ratio in Hong Kong. So let's start with this question. What's the purpose of banks? Well, just like many financial institutions, banks provide capital to make things happen, and banks do that by lending. So we believe in the context of sustainable development, the purpose of banks is to support sustainable development by lending. And there are three interrelated outcomes that a sustainable bank should strive to achieve. The first is resilience. A sustainable bank should ensure resilience against environmental and social risks. For example, climate change may accelerate the frequency and scale of flooding, which can destroy assets and pose financial risk on banks, which must be mitigated. because after all, an insolvent bank can't save the world. But a sustainable bank shouldn't stop there. Instead, it should go forward to explore how it could create an impact for the world. In certain key areas like renewable energy, there are significant capital gaps to fill in order to facilitate a low-carbon transition. And banks should capture these opportunities and channel more capital to these key areas so as to facilitate our low-carbon transition and sustainable development. It's like growing big trees so that we hope that someday these trees will shield us from the rain and storm. And finally, banks should also grow grass and flowers, which means banks should leverage their influence as a creditor to drive their borrowers, companies, to become more sustainable. Internationally, we've seen a lot of dynamics of sustainable banking. We've seen, for example, the UN Principles for Responsible Banking, the TCFD recommendations, and the Equator Principles. And nationally, we've seen the Sustainable Banking Network supported by the IFC and also the NGFS, the Network for Greening the Financial System, where our regulator, the HKMA, is also a member. To give some credit to our regulator, the HKMA, along with the government, has been a great supporter of green finance in Hong Kong. Just some example of recent measures include green and sustainable banking, support for responsible investment, and the establishment of a Center for Green Finance, as well as a cross-agency steering group. As Joseph just mentioned, the HKMA recently published a common assessment framework on green and sustainable banking for assessment of banks' green baseline in Hong Kong. So perhaps it's now a good time to compare our approach to those of our international peers. The first thing I want to talk about is supervision, which is about setting supervisory requirements for banks' behavior. Now, supervision tends to focus more on risk management, but some do address impact as well. So we've reviewed a number of jurisdictions, how they are doing supervision, and these are some of the major ones we've reviewed. Usually, instead of just requiring banks to do risk or impact management, regulators tend to also require banks to have suitable governance, strategy, management, and disclosure in place so as to support risk and impact management. So in Hong Kong, the HKMA developed quite a comprehensive assessment framework for both climate and environmental risk management. But we observed at least 3 differences compared to international practices. In EU and UK, while the supervisory expectation from their bank regulators also focus more on risk management, they already have risk disclosure requirement in place for large banks in EU and UK under the Non-Financial Reporting Directive. And what's more, it requires not only risk disclosure, but also impact disclosure, which is not currently covered under the HKMA's Common Assessment Framework. And mainland China even took this further by developing a comprehensive supervisory requirements for both risk and impact management. So to look a little bit further into China's case study, it basically followed a guideline, reporting, and evaluation pathway. It all started with the Green Credit Guidelines in 2012, which required banks to manage environmental and social risks, as well as channeling more capital to sustainable green projects. It also specified detailed requirements in terms of governance, strategy, management, and disclosure. These guidelines were then turned into a set of KPIs for banks to report on. For example, banks would need to report whether their board approves a green credit strategy for both risk and impact management. And these KPIs were then turned into an evaluation exercise in 2017, so banks would receive a score based on their green banking performance. Another major policy tool for sustainable banking is mobilization, which is about channeling more capital to sustainable economic activities. And obviously, this is about growing the big trees. There are 2 major components of a mobilization policy. The first is taxonomy, which defines what qualifies as green or sustainable so as to avoid greenwashing. For example, a hydropower plant would not qualify as green if it incurs significant harm to the environment. And the second component is an incentive, which is quite straightforward. It serves as a driver of the mobilization policy. In China, we can see exactly this pattern. It started with the Green Credit Statistics System in 2013, which provided a green taxonomy for banks to report their green credit statistics as well as measurement of environmental benefits. And in later years, a wide range of incentive policy were launched, including green credit performance evaluation and certain credit interest subsidy schemes in local green finance pilots so as to encourage banks to lend more to green projects. In EU, many of us are familiar with the EU taxonomy, which just got final approval in the Parliament last week. And certain policies like green supporting factor and brown penalty factor are also under consideration as part of the EBA action plan. In Japan, the Ministry of Environment launched an interest subsidy scheme last year, which provided a 1% interest subsidy to ESG loans that serve certain ESG objectives or carbon reduction. And in Hong Kong, unfortunately, mobilization policy doesn't seem to be on the sustainable banking policy agenda at all at the moment. So it's like blank at this moment. And finally, if you still remember this poor little oven here, the breadth of impact doesn't seem to be considered in current regulatory frameworks. And we believe there's an opportunity here represented by a popular instrument, sustainability-linked loans. If you haven't heard of it, a sustainability-linked loan is just like an ordinary loan, except that its interest payment is tied to certain sustainability targets. Unlike green loans or green bonds, sustainability-linked loans doesn't require company to use the proceeds for specific green projects. So it's more flexible, it could be for general corporate purpose, and it's entirely outcome-based so as to create an incentive for companies to improve their sustainability performance. The growth of sustainability-linked loans has been tremendous in the past 2 years. So we can see in the past 2 years, the annual growth rate of sustainability-linked loans has been over 500%. And Hong Kong now shares about 2% of global issuance, which is not bad in APAC region. We account for about half of the issuance in the region. But if we look at the specific deals, we'll note that about half of the issuance actually came from a single deal of COFCO International. And the rest is also concentrated among a few large companies in Hong Kong. So we were thinking, how could we expand the use of sustainability-linked loans to a wider spectrum of companies? And our study has identified 6 major problems which can be categorized into 3 major aspects. The first is technical, which means companies may find it difficult to use SLL, especially when it comes to target setting. And the second is economic, which concerns the additional costs of using SLL, as well as the financial incentive from the potential margin reduction. And finally, awareness means that companies may not appreciate the additional value of sustainability, or they may just not be aware of the instrument at all. And we believe there's a role for policymakers to play to address these different challenges. Lastly, before I stop here, I want to make a final remark that banking has great potential to become part of the solution to all the challenges we are facing. But whether it could live up to this promise depends on not just the banks themselves, but also cross-sector collaboration. And I hope the cross-sector discussion here today can serve as a starting point of a dialogue that can lead us to a truly sustainable future. Thank you.
Thank you, Johnson, for your insightful overview of the sustainable banking landscape. Today, we're excited to have with us 7 heavyweight experts from around the globe who will be sharing with us their valuable insights on the current challenges and the future of sustainable banking in Hong Kong, as well as globally. We're delighted to have with us virtually Professor Christine Low, the Chief Development Strategist at Institute for the Environment at HKUST and visiting professor at the Anderson School of Management at UCLA. Dr. Ma Jun, the Chairman and President of the Hong Kong Green Finance Association. And Professor Colin Mayer, Peter Moore's Professor of Management Studies at Saïd Business School at the University of Oxford and Academic Lead of Future of the Corporation Programme at the British Academy. We're honored to have with us today Mr. Joseph Chan, Ms. Pratima Divji, the Regional Director of CDP Worldwide. Mr. Jonathan Drew, the Managing Director of Sustainable Finance, Real Assets, and Structured Finance at HSBC. Mr. Johnson Kong, and our moderator of the panel discussion, Mr. Stephen Wong, Deputy Executive Director and Head of the Public Policy Institute at Our Hong Kong Foundation. Stephen, the stage is yours.
So much. It's been an honor to have this panel, distinguished panel, online and also physically in our seminar here. And I wanted to just have a brief background of why are we doing this. If we look at a couple of the previous reports that we do in our Hong Kong Foundation, we cover green bond, we cover ESG reports and social impact reports, because we think these reports are very crucial to our general development in Hong Kong. So without further ado, I want to launch punch into the panel questions. I wanted to invite Professor Mayer joining us from UK. And particularly, I wanted to set the stage really as to, I know Professor Mayer, you are an expert of this concept of the purpose of a company. And specifically, today we talk about the purpose of banks and, or even the purposeful regulation that you previously championed. So can you also elaborate on that? Professor Mayer, you may, yes.
And indeed, the purpose of banking, as Johnson referred to it, is a critical issue. We have to be clear what we mean by the purpose of a company and the purpose of a bank. By the purpose of a company, what we mean is why it exists, what it's there to do, its reason for being. And on the British Academy Future of the Corporation programme, the way in which we define the purpose of a company is to produce solutions. Solutions to the problems that we face as individuals, societies, and the natural world. And to do so in a profitable and commercial fashion. So we define the purpose of a company as being to produce profitable solutions to the problems of people and planet. And furthermore, that companies should not profit from producing problems for people or planet. Now, the importance of that in relation to banking is that banking has a key role to play in terms of the allocation of resources for funding investment in an economy. So it can influence the way in which business determines its investments in such a way as to encourage those two components of purpose to which I've just referred. So let me start with the second part, namely not to profit from producing problems for people or planet. That is basically what we mean by responsible business. And one of the key elements that banks need to perform is to ensure that the way in which they are investing in the corporate sector does not promote the production of harm by companies that they're investing in particular, what we're talking about here, in an environmental sense. So first of all, there's a key question about evaluating the impact that those investments are making and establishing to what extent there may be detriments associated with the investments and what mitigating activities banks should be performing in terms of trying to diminish those detriments from its investment. So that's the first element. But a second element is in terms of the way in which banks can actually promote positive outcomes, because there is a massive requirement for new investments to be made, in particular in renewable energy sources, but in general in investing in activities that are going to help diminish the extent of not just climate change, but also the extent to which we are depleting our natural resources and natural assets around the world. And it's critical then that, first of all, banks recognize the role that they have in doing that, and secondly, demonstrate how they're actually delivering in promoting real positive change in the companies in which they're invested. And that comes to a second key element, and that is how one measures this. There's been a lot of discussion just now about the various approaches that different international bodies are taking to measurement. But what is key is that both companies and banks have measures that they perform that evaluate the extent to which they are avoiding harm and creating positive benefit. And some companies are doing this in a very effective way in terms of providing very clear metrics against which, for example, they are reducing their CO2 emissions. And financial institutions, including banks, need to demonstrate how their investments are likewise contributing towards diminishing those types of harmful environmental impacts. So that is the critical role that banks and forms of measurement need to play going forward. And there are some very good illustrations of the ways in which banks are playing that key function in terms of thinking carefully about their purposes, thinking about how they can really contribute to addressing these issues and actually implementing that. And let me just end by saying that banks are particularly important in this regard. We've heard a lot about things such as green bonds and sustainable forms of financing. But it has to be borne in mind that many companies are heavily reliant on bank finance. Bank finance is particularly important for what is perhaps one of the most important and growing sectors of economies around the world, and that is small and medium-sized enterprises, SMEs, which in many cases do not have access to public financing markets, public bond markets or equity markets. For them, bank finance is critically important. And having the right relationships between banks and SMEs is of key importance in terms of ensuring that they get the finance that they need, and secondly, that banks are targeting that finance in such a way as to encourage those SMEs to invest in a sustainable way. But it's not just SMEs, because even at the large end of the corporate sector, there are certain forms of financing that are not well suited to bond market or equity market financing that require large, for example, syndicated lending by banks. And there again, there's a vital role the banking sector would play. Thank you.
Thank you, Professor Amir. That's very helpful. Let me turn to Dr. Ma to pick up on the theme that Professor Amir talks about. Is this theme of evaluation in order to promote positive outcomes and minimize the detriments. Obviously, in mainland, we talked about there is the incentives of green credit performance evaluation that seems to be pretty helpful in terms of an incentive to channel and mobilize capital accordingly. Dr. Ma, can you comment on what do you think of this policy and in mainland China, and whether there are room for other policies such as what Johnson mentioned before, is a green supporting factor or brown penalty factor that is even more aggressive in terms of the usage of the changing regulatory capital to channel capital in the banking sector accordingly. Dr. Ma, sorry, we just need to unmute you. I think you're muted for now. You can unmute yourself. Okay, maybe we can turn to other, while we are unmuting Dr. Ma. And Christine, I wanted to turn to you on this question. You were obviously in the government sector before, and now you are working on various capacities. We were talking about this theme of collaboration. It's not just about banking, financial institutions, not just about the government. It's about a lot of different, stakeholders to collaborate in order to promote the sustainable banking. Christine, if you can, comment on this concept of collaboration within the government and outside the government with the general civil sector, civil community.
Right. Well, thank you very much. I think collaboration is key to going forward. What everybody has said so far illustrates, in a way, how far we have come. And I think Joseph and also Mr. Kong, you've kind of laid out what needs to be done and what's happening. What I'd like to see is how do we speed things up? And the only way, I think, to speed things up and to learn from each other very quickly is through collaboration. So what I'd like to see, for example, Hong Kong has taken a great step within the public sector, which is that they created the Green and Sustainable Finance, the cross-agency steering group. This is very important, and I'd like this group to also start to look at that speed up and scaling up, whilst at the same time, all the fundamental work, like the HKMA that others have talked about, whilst that kind of work continues, ESG work continues, SFC works continue, we need to look at that scale up and on the commercial side in terms of working with the banks. So what I suggest is this. For the policymakers, they should lay out perhaps 3 kind of constant reminders. Make it their policy, and then the reminders is where they tell themselves, this is where we need to focus. And the 3 reminders are, first of all, what are you really trying to do? You're trying to internalize externalities. So policymakers should always be asking themselves, what can we do from policy to internalize externalities? The second thing they want to do, and which is what others have really talked about, we need to adjust the risk perception in order to boost green investments. So again, from a policy perspective, I'd like to see the steering group constantly asking themselves what contribution they can make. And then the last one is, we all know what we want is to direct large sums of money into green investments. Now, this in particular is where they need to work closely with industry and with the banks. And since we're also talking about raising capital for mainland China, particularly with a focus on the GBA, it's very important for the policymakers, that means government to government, to have good discussions and in a way tell each other what are the major projects that the government and the private sector wants to do in the GBA. If we are able to have that kind of information, it then is possible to work with the banks and say, well, how do we fund this? And government can then step in and say, is there something that we can do to scale up? So let me give you one example. So buildings, right? For cities like Hong Kong, Shenzhen, Guangzhou, Beijing, Shanghai, and in Asia as well, making buildings much more energy efficient and much greener requires retrofit of existing building stock. I think nobody disagrees with this, but it doesn't seem very commercially attractive. So what we have to do is we have to ask ourselves, how do we make it commercially attractive? In the public sector, what is it that they can do? So for example, can the public sector provide the guarantee so that companies that are in that business could be doing more and more projects? So how do we divvy up the risk, so to speak? Now, in order to do this properly, with proper transparency of what the system is, It's very important for the policymakers to work with the banks and to work with property owners. I don't want to go on and on, but the point that I'm trying to make is lay out the principles, work with the industry, and work with the banks so that we can scale up, direct money into the areas where you want to. And then, of course, you can look at circular economy, which are the ones that is most relevant in the GBA. For example, shipping in Hong Kong, decarbonization of shipping is a very big issue going forward. So you can then segmentize yourself and say, in each of these areas, what is it that policy and the banking sector, what is it that they could do to expedite the transition? So I'll stop here.
So if I can paraphrase, what you're saying is that you seem to expect the government not to just have a general green finance slogan, but you also want to do it pretty granular in terms of which industry that needs to reform itself to a more sustainable way, and we start from there so that the industry and government can work together towards that pathway. That is very... Christine, yeah.
Well, that's right, Stephen, because if we look at the green, the GBA plan, it requires, it encourages and requires the Guangdong, Hong Kong, and Macau to work at a policy level to make certain things happen. And China has not only reformed, or is continuing to reform the financial services sector, it also has a national policy of promoting ecological civilization, which is a green development policy. So how are we going to do all of this? So by them coming together, by actually having new policies, we can expedite the transition. So this is, as I said, under national policy, this is required of the GBA.
So that's back to Professor Mayer's point that the purpose of a bank is to channel capital to where? To, like what Christine said, almost to have a goal of a plan from an industry level so that we know where those green capital are going towards. I know Dr. Ma would have a lot to say on this as well. Let me try and see whether we can unmute him or whether he can unmute himself. But Dr. Ma, I wanted to go back to you on, not just on the GBA question generally, but can you comment on the banking green supporting factor or sort of the regulatory capital changes? Are those feasible under sort of the regulatory regime? Okay, we still have these technical problems that we cannot hear you, Dr. Ma, apologies. But on this, what Christine mentioned, I have to turn to Joseph, since Christine mentioned about this cross-agency steering group that the government recently set up, so really a collaborative effort within the government to promote green finance. Joseph, can you talk a little bit more about that and what do they do and that sort of things?
Sure, Stephen. Thank you. As Christine mentioned, on one hand, in Hong Kong, different agencies, including our regulators, have been promoting the development of green finance in their specific portfolio per se. But we also recognize, as Christine mentioned, that it's very important to have the collaboration among them to maximize the impact and the output. So that's why we have set up the Green and Sustainable Finance Cross-Agency Steering Group. We just held its inaugural meeting last month. The members include HKMA, SFC, other regulators such as Hong Kong Exchange, Insurance Authority, and also MPFA, the Mandatory Provident Fund Authority, and also two policy bureaus from the government, which are the Environment Bureau and the Financial Services and the Treasury Bureau, which is where I'm from. In terms of the aims of this steering group, there are three. First, we want to coordinate the management of climate and environmental risks of the financial sector. Secondly, we would like to accelerate the growth of green and sustainable finance in Hong Kong. And thirdly, to support the government's climate strategies as well. Well, under this steering group, we also have formed two work streams on a more granular level. One work stream is to study and address cross-sectoral regulatory issues. The other work stream is to coordinate cross-agency marketing development efforts because when we do market promotion, it's always better to collaborate and maximize the output and the impact. And also in terms of regulatory issues, you would find that for different regulators, certain standards or so would have a cross-sectoral impact. And that's why we formed these two work streams under this steering group. And in general, what we would like to see is that this steering group will provide strategic direction with a focus on regulatory policy and market development to boost Hong Kong's position as a green finance hub in the region.
Thanks, Joseph. That is a very worthwhile effort. Let me just try Dr. Ma again on this question. But for audiences and reporters, feel free to also write in your questions on Zoom if you're on Zoom, or if you're a live stream platform, feel free to write on your questions as well, and then I will try to get back to you during and invite you on to our discussion here. So let's see whether we can help Dr. Ma, if you can join our conversation. Okay, can we help him to unmute since he is still muting himself? Dr. Ma, can you unmute yourself? Or okay, if not, let me just go to.
I'm muted.
Yes, that's great. Okay, we finally. So I think please, Dr. Ma, we were just on this question of regulatory capital and sort of the China experience. Can you share a little bit on that?
You hear me okay now?
Yes.
You hear me okay?
Yes.
Yes.
Stephen?
Yes.
Good. Well, first of all, thanks for the invitation, and sorry for the technical problems. I was told to be on the telephone rather than on computer. But let me focus on what I believe are the 6 key components of a sustainable banking system. The first one is taxonomy. Currently, Hong Kong doesn't have official taxonomy, but I think even if it doesn't have official taxonomy, the banks can choose one from the existing ones. I heard that there are 200 taxonomies already in the world. This is information I got from a recent discussion in International Standard Organization. So there are a lot of taxonomies available, and Hong Kong institutions, if wanting to do green finance, they need to have some sort of taxonomy. So pick one of them to use for now, and later on waiting for the regulators to come up with the official taxonomy. The second key component is what I call process of managing environmental and social risks. This is something like the Equator Principle, but need to be translated into specific procedures for managing such risks. For example, within the procedures, there need to be elements such as quantifying the environmental impact of the project, such as estimating CO2 emission, SO2, NOx, water consumption, energy consumption, and so on, before you can really label a particular project as green or not green. And another key element is to monitor the green performance of the project, which is financed by the loan. So this has to be done on a continuous basis for the entire maturity period of the loan. The third element is what I call pricing green loans correctly, which needs to take into account the externalities on a forward-looking basis. And that's why I'm bringing the concept of environmental risk analysis, which is now being promoted by NGFS. And a report is coming out in July this year from the NGFS to introduce methodologies on how to run environmental and climate risk analysis for the banks. And such models would be enabling the banks to price the loans with environmental benefits more correctly than otherwise. The fourth element is the disclosure piece, which HKMA is now working on, and many other countries are beginning to focus. But let me introduce you to what we did in the Green Investment Principles for the Belt and Road. This set of principles was launched by China Green Finance Committee and City of London back 2 years ago, and we're now asking the 37 members, which are mostly financial institutions, to begin to disclose the information on their green activities based on 3 levels of disclosure requirements. One is to disclose green lending and green investment activities, as well as the environmental benefits. The second level is to disclose the brown activity information and environmental impact. And third level is the forward-looking information coming out of environmental risk analysis, such as stress testing and scenario analysis. Most companies are not able to do level 3 yet, but we're pushing them to move from level 1 to level 2 and gradually towards level 3. The fifth element is the incentives. As Johnson mentioned earlier, China has some incentives, such as the central bank level. We introduced the macro-prudential assessment for green and introduced a re-lending facility that offers the cheap financing for green projects. And also at the local level, there are a lot of subsidies and guarantees programs by local governments to incentivize green lending. And I think Hong Kong should consider developing an incentive structure. Finally, it's a product innovation, which is very key at the institutional level, because without the system of suite of products, you won't be able to meet the very diverse demands of different green projects. So we need to have long-term, short-term, risky money and instruments with liquidity, as well as products specifically designed for certain industries, for example, green buildings. So many of these efforts are not going to be done by a single institution and need to have collective efforts by multiple agencies, including from regulators, financial institutions, and real economy, and the environmental ministry. Back to you, Stephen.
Dr. Ma, can I follow up on your first point about taxonomy? I just want to make sure I understand correctly that you're saying that obviously Hong Kong needs one, and I understand that the cross-agency steering group is working on one. And is your recommendation that Hong Kong should not wait, because obviously the EU is working on the international harmonized taxonomy that is coming out later this year. So should we wait for that, or should we work on something that might reinvent the world?
No, there are two concepts for Hong Kong. One is Hong Kong regulators, and the other one is Hong Kong-based financial institutions. What I'm saying is that the financial institutions, including the more than 100 banks, they should move ahead without waiting. And at this sort of interim period before official taxonomy are coming out, they need to have their definition of green activities so that they begin to quantify their green lending activities, benefits, and KPIs internally. The government or regulator may take a couple of years before they come up with official taxonomies. And that official taxonomy in Hong Kong could be the future harmonized version between China and Europe.
Great. And also, now I want to turn to Pratima, because picking up the point Dr. Ma mentioned, that for a lot of institutions to do forward-looking scenario analysis on climate has been very difficult. And obviously you are an expert in data and modeling. Can you comment on this, and are there any things that the government can do maybe to help companies or banks to handle this sort of scenario analysis more in the future? Pratima, if I can.
Yeah. Thank you, Stephen.
Yep.
I think this is something that we get routinely asked by companies, and I think just to pick on Professor Colin Mayer's point as well is how do we pull SMEs into this conversation? Because climate scenario analysis and climate modeling can be an expensive exercise. And so I feel there's probably two ways that Hong Kong could think about this. And one is, of course, government support. So the government of Hong Kong already has, annual emissions that they monitor. They have a reduction plan in place. So one of the things that they could proceed with, perhaps, is looking at which are the high emitters, which are the ones that need to align with their own reduction plan. And for those sectors, perhaps come up with a scenario analysis. And what that would do is then not just help the city, but also the businesses in those sectors with giving them a sense of planning, tracking, as well as benchmarking as to where they will be. And that will particularly help the SMEs in those sectors, because it's not like they don't want to do something, but if it is costs that is what they're grappling with, then perhaps this is where the government could step in. And perhaps the the cross-sector agency could consider this as one of the work streams. The second is from an industry perspective itself. And I want to bring up one example over here. So the telecom industry globally has come up with its own decarbonization pathway until 2050. And they have done this with the Science-Based Targets Initiative, which CDP is a founding member. This decarbonization pathway has been developed by the association, and it gives a clear sense of planning for the entire telecom ecosystem, not just for the major players, but also the suppliers and the SMEs in that industry. We're now developing a decarbonization pathway for the financial sector, and we will be releasing that in September of this year. And it's currently going under public consultation. So if that is something that is of interest to the green finance associations of the Greater Bay Area, it's certainly something to be a part of and also understand how this decarbonization pathway would work for an entire sector, which could then have a better understanding on green versus brown exposures, what is the strategy going forward, and how are banks actually working and considering sustainable lending practices when financing emissions.
And if I can turn to Jonathan, we talked about the principle of responsible banking, and obviously you are in a bank and you are the pillar of green finance in Hong Kong from the industry perspective. If you can comment on what sort of general movement of the green finance in Hong Kong, sustainable banking, or even particularly in the context of principle for responsible banking generally, what would you say on that?
Yeah, certainly, Stephen, and thank you, and thank you for inviting me to join you today. Perhaps I can address that first by going back to Professor Meyer's point early on and just say very clearly that I completely agree with his view and assertion about what the responsibilities of banks should be. I think it's very important to recognize that. And in our work in Hong Kong, and particularly through organizations like the Green Finance Association, which Dr. Ma chairs, the purpose of that group is to really see how we can support bringing the whole market along towards the whole market being more effective at managing the risks, being more resilient, as Johnson quite rightly pointed out, as well as delivering capital to where it's needed to support the transition. And to Christine's point around collaboration, I'd also like to say I completely agree with that. And in a sense, I think this goes beyond just finance and actually to society as a whole as we look at dealing with this unprecedented challenge for human society. And we're sort of used to this system where we've sort of succeeded as a species with this complex mix of survival and competing as individuals, but then working as groups. And we now have to evolve to work as a big global group, actually, if we're to address this huge challenge. So I think that's critical as well. And I think so that's why bringing from that level down to what the government has done in setting up the interagency collaboration is critical. Joseph, we had a team of representatives from the Green Finance Association, including Stephen, who saw your boss the other day, and we were very much making that point that we really want to engage with all of the components of that group, bringing together sort of industry, the financial sector, and government and the regulators and the exchanges to address this. So I think Hong Kong is well placed. I think we have the smarts, if you like, in town. We have the people who understand the issues from a technical perspective. We have the finance experience, and I think we have the commitment to actually make a difference. So it's really now, I think, mobilizing ourselves as a group to do that. And Hong Kong has, I think, had a reasonably good start. We had, I think, it's not just green bonds, but if I just touch on green bond data, again, with good leadership from the government and the government program, for the last couple of years, we've had more than $10 billion of green bonds either raised in or arranged in Hong Kong. We've had in each year at least $2 or $3 billion raised by Hong Kong domiciled entities. So, Hong Kong players, doing their part. Hong Kong as a regional financial hub working. We have, through organizations, I've talked about the Green Finance Association, but through the Asia Pacific Loan Market Association, Hong Kong has played a leading role in the development of the green loan product, and Johnson mentioned that earlier. And also the APLMA has been very active in driving, and the banks in Hong Kong, driving the development of the sustainability-linked loan product, which globally, I won't repeat the numbers that Johnson put up, well I will, almost went from, the principles came out in March 2019, and in that, so really the first full year was 2019, more than 140 billion done globally. Johnson showed only 2%, that's by value. Actually, if you do it by volume of transactions, it's more than that, because there are some very high value transactions done by large corporates in Europe. We've seen bonds, we've seen loans, we've seen the Hong Kong banks leading on things like green trade finance, green working capital, and then across on the other side of the balance sheet from the bank's perspective, in terms of what banks have then done to create investment opportunities for stakeholders. We've seen Hong Kong banks leading with green CD issuance to both institutional and into retail investors. We have green deposit programs being developed, so the banks, looking at the sort of the green assets and then creating opportunities for the wider capital markets as well as clients to actually participate in those by supporting the banks through the funding. So absolutely no complacency, but I think a decent start. And again, to Christine's point, how do we accelerate it? How do we scale this rapidly?
Interesting. In the spirit of collaboration, this theme that we have, one of the themes that we discussed today, really, Pratima talks about the decarbonization pathway for the telecommunication industry and financial sector. I wanted to go back to Christine, if you can also comment on what you were involved with the shipping sector, where they come up with the Poseidon Principles, as you are one of the board members of the Global Maritime Forum. It seems to be pretty interesting effort there to decarbonize, as part of the green finance globally as well. Christine, can you comment on that as well, what we can learn from it?
Right. I think the thing to watch is you can see people in different sectors of industry who are taking something on themselves to help to promote dealing with climate change. So the Poseidon Principles was really put together by banking institutions to agree amongst themselves a set of principles upon which they'll do their business. So this is a voluntary coming together of people in the sector that works with the shipping industry. So I think if we look across different sectors, you can probably find where there are people who are really trying to push the envelope. Now, I think the shipping sector is interesting for Hong Kong because we are a port and we do have a large number of companies that are shipping companies that are registered here. And we mustn't forget also that China actually has some major players in the shipping sector. So something like the Poseidon Principles, we don't have a lot of Asian participants yet, but as we go forward, this really should be a kind of global collaboration. But as I said, the important thing is the example of industry, people in business coming together to innovate and try and push the envelope.
That's really interesting. I mean, we still have a lot of questions. I'm sure we can spend a lot of time talking more about this distinguished panel. But obviously, I want to keep the time as one of my job is to make sure that it ends on time. So I'm sure, through this panel, you have the feel that a lot's going on globally as well as in Hong Kong, both from the industry sector as well as from the regulators and government perspective. And hopefully, we can capture on this momentum so that we can, through collaborations with various stakeholders, we can see a better future for the climate, for globally, through the sustainable banking effort generally. So thank you everyone for getting online to watch this program, and thank you for our panelists online as well as physically. Thanks so much. Thank you. Bye-bye.
And this concludes today's webinar. Once again, thank you all for joining with us today and sharing your valuable insights. And special thanks to guests joining us from around the globe virtually. A quick reminder to all panelists that there will be a group photo after the webinar, so please stay with us. If you'd like to revisit today's webinar, please visit our Hong Kong Foundation's official website or Facebook page. I'd also like to thank our supporting organizations: the British Academy, Tsinghua University's Green Finance Center, the Oxford and Cambridge Society of Hong Kong. It's been a pleasure speaking in front of you today. Thank you all for coming. Stay healthy and have a great weekend. Thank you.